What's up, everybody? What's up, man? What's hanging, cousin? Any good people. Hope you guys had an amazing week. Because when God is good, He's good all the time. So yeah, man, I'm just going to do a brief breakdown of my analysis and as to why I took this short position. So yeah, currently I'm on 3-minute time frame. 3 minutes. My neighbor's opening his gate there. So I'll firstly go to the 4 hour, and on the 4 hour we see that there's 2 last points of true mitigations that are marked. This is for the daily and this is for the H4, the 4 hour. After this daily POI was violated and the market went above it. So I had to then go back into extending the range that I had originally thought the market was going to trade in. So I had to extend it and take it back to these previous highs. And then once I pulled my fibs, I know it looks messy now. I'm going to go down to the 4 hours so that it makes a lot more sense. Okay. So this whole down move that you see here, this is just to show that when the market returns back to this side, filling these gaps here, it's going to come back somewhere here to this POI that is marked here. But this is the move that I took all the way down to somewhere here. So once again, the market breaks above the daily POI that I've marked here, and when it gets here, it goes into a 4-hourly or a 4-hour order block that is marked way back here. This baby over here. So when it gets into it, it gives us an indication of a reversal. With these similar in a way, just that this one is bigger and it has a longer wick than this one, but they both reverse in more or less the same price zone, and both of them show wicks that break previous or break structure, like the wick breakouts. And you know about the wick breakouts because on smaller time frames they show those wick breakouts, those fake outs that then go back to collect more momentum only to proceed in the initial direction, whether it be up or down. So those are the kind of entries that I capitalize on. So I'm going to go down to 3 hour just to break it down and make sense of these reversals, these signs of reversal here. Yeah, see this wick here. I think I should move this thing. Yeah, there we go. So yeah, here. There's a reversal that's happening here. Because at the end of the day, there's these imbalances that need to be filled. These imbalances that need to be filled. And unfortunately at this current stage the market got here, created a W, extended W formation, came back to retest the neckline and extended all the way up. Classic W formation. And then you have those ICIs. And yeah, these ICIs and W formations or strategies or a tool set filled with skills that I got from the one and only Roll Your Jack. Yeah, and another of these principles, like I always mention, I got from the OGs, ICT Trader, and another of these intelligent young minds is IPDA Trader. And another guy that I get these concepts from, which I always seem to forget, I don't know why, is Transparent FX. I think the guy's name is Nick. Yeah, Transparent FX. So yeah, these are the guys that I follow and I shadow, because I find their concepts to make perfect sense when you look at the market in the sense of it being an algorithm, not thinking in terms of buyers and sellers and just simply thinking about liquidity and where the money is, because the market is always going to chase the money. So yeah, we are somewhere here. We're going to go into the hourly, and then it becomes more evident that when it gets into the zone, you have somewhat of a reaction here that forces the market to be indecisive and creating new lows in the process. But my favorite time frame starts from the 30 minutes going all the way down, because that's where I pinpoint my entries. That's where it becomes more clear for me as to where I should enter, because this is where I mark my POIs, my points of interest, because the market is fractal, so it'll do the same thing in all time frames, and then you watch it. For me, it's fascinating to watch it being birthed in the lower time frames. So yeah, this is what I mean. This is why my position was placed the way it was. It is because of these concepts. It is because of these concepts. This is the 15-minute. Okay, I'm just going to bring back this. There is this thing, yeah. I'm going to bring back this sell thingy indicator thing tool. and this is where I was entered into the market, because when the market creates this this lower high, I know for a fact that we could be starting a trend of new lower highs and new lower lows, moving all the way down, because we have imbalances that we need to fill on this side of the market, like sections like this here. This is a place where the market is likely to come and retest, and then we have gaps here. We have but that is enough for the fact that we are using this zone. And then if we take this zone and we shift it to the most recent low and we take it here, then it makes logical sense as to why I would take my profits somewhere here. Because when it starts meandering here after taking profit 2, this is profit number 1, the 27,272, and then at the 62, negative 62, and the negative 100. So when it starts meandering in the zone of negative 62%, or the negative 62% zone, I'm going to manually close the trade, because I'm not about to lose some good money over a few pips. So yeah, this is what I look for when I look for entries, all the way from the smallest time frame. Must not be afraid to use this thing. This thing is most interesting for me for when you see the actual shift happen on smaller time frames. So IPDA trader like inspires me when he's able to, as well as ICT trader, when they're able to pick up these moves, because they can see the overall structure develop as it's developing, because there's an order block here that just broke structure and is creating this initial move that we see on the 15 minutes, but it's already been created here on the 5 minutes. So based on our initial calculation and the range that we are in, when the market gets to this order block and it doesn't break above, comfortably closes below, and it comes back to retest, we're gonna come in somewhere here, this candle here, put me into the market, not this one. And then from there on, you just watch the structure try to fool you, but it never breaks the initial previous high, and it just goes lower and lower and lower and lower and lower until it gets somewhere here. When it starts meandering here, this is where I am stopped out, and then it goes into this range, and I wake up the following day and it's somewhere here, and I'm like, yeah, I'm fine with that because I already took my money here and that's enough for me. So it's all about, for me, what I've come to notice that makes more sense is taking each day as it comes and always having a daily bias, because you're always going to follow the process of how each and every session has its role to play, and how each and every session introduces the session that comes after it. Because when these sessions do that bridging with a crossover, that's another sweet position where you have to look for possible entries based on the overall bias and just the overall rules of the algorithm and what you know it's supposed to be doing, just based on things like liquidity or market flow, or perhaps there's a POI or a last point of true mitigation, or it's pulling back from a trading range to those possible 70, 80, 90 levels, and it's showing you a reversal on the H4, and then when you go to the H3 it's also showing you a reversal. You go to the H2, it's showing you the same thing. You go to the H1, you go to the 15, you go to the 5 minutes, showing you the same thing. That means that everything is linking up, everything is matching up, and the market tends to do that when it's prepared to make the change. And all you just need to do is to focus and don't panic. Wait for those setups to occur, and once everything is lining up, you enter with ease, with minimal risk, and you just wait for the market to do what it needs to. It's as simple as that. I don't know how to explain it, but that's the kind of things that I saw. Because when the market makes a reversal on a POI, and you check the POI on lower time frames, and you see POIs on lower time frames that are being respected on the initial POI, like you see a POI within a POI within a POI, but still showing you a synergy in the overall market flow. It is not one move contradicting the other, and these POIs are POIs within POIs. So the market is telling you that, yeah, I'm preparing to do something juicy, as I like to say. And I'm trading a demo account, so I have nothing to hide. There's 2 positions that I lost prior to taking this position, but I like to pride myself in the fact that having this rule of having to open 3 positions per week, I know that if I were to lose two of these positions and win third, that third wins enough to cover the 2 that I've lost to such an extent that I don't mind. So yeah, I'm not big on going in depth. I just like to give the overall ideas, because even if I give my in-depth way of analyzing, it is still not going to be as powerful as you taking these simplified concepts and trying to integrate them with your style, your flair, and your essence, because it needs to be something that is flowing for you. Don't try. I don't want to make you like to try and trade the way that I do. What I'm saying is, I get these concepts and I make sense of them my way, because I see the market as a dance. So I try to predict the moves based on the rhythm that I see. Some people see it as a matter of money, where it's monetary or currency value. Some people see pips, some people see patterns. So yeah, it comes in many shapes and forms, but this is how I understand the market. And I'm getting these concepts. What I'm saying is I'm getting these concepts from Rolio Jack, I'm getting these concepts from Transparent Effects, I'm getting these concepts from ICT Trader and IPDA Trader. If you follow those guys, because they do this thing beautifully. I haven't got to that level where I can explain everything in detail, but they explain it beautifully. So yeah, that is how I got to take this sell position, because on the higher time frame the market was overextended and it had reached a POI where it looked like it would do a pullback, and I was betting on that pullback, and I'm still I'm looking for the word. I'm still hopeful, or I'm still positive as to saying that the market is going to come back and correct this. What's happening here? It's just that the market now needs to, also based on the CO2 report, it needs to come in full for this liquidity here. Needs to come in full, and Swiss franc is only going to close their sell positions based on the CO2 report. They're only going to close these take profit. They're going to close these sell positions in profits, or take the profits for these short positions when the price is expensive enough for them, because they're going to sell high and they will only buy low, so they're only going to sell high here. When they close these profits, they're going to be skyrocket high, and the dollar has this commitment to fall. They have this commitment to fall. This is what's going to this is what's going to boost it and take it to those levels where the Swiss franc then feels like, yeah, it's good enough to sell, and then they're going to close their positions and take their profits. But yeah, those numbers can only reflect what is about to be happening here between Monday, Tuesday, and Wednesday. And then Thursday they're gonna decide, and when they decide, I'm gonna be there waiting like a sniper, just waiting. Telling you, I'm gonna be waiting there. So yeah, these are the kind of things that I look for. I hope it makes sense. If it doesn't, please leave a comment, like, share, subscribe, spread the word, let's spread the gospel. And like the OGs always say it, good luck and happy trading.